Good morning, everyone. It's about 10 to 10 here on the 5th of May, and you should get this in your inbox on Saturday, the 8th of May, the same day as our international user group. So, I'm looking at Bloomberg in the background here, and it's leading commodity prices through the roof. It seems that lumber prices are up nearly 5% this morning. Commodities rising across the world, and this is not something that's new. It's been going on now for the guts of the last year, and commodity stocks have been the place to be. I see the FTSE's up based on that this morning, commodity heavy, 80 points. So yesterday we had a down day in the US, which took the shine off the UK market. That was caused essentially by Helen Yellen saying that interest rates will have to go up. And the American market gapped down and just kept going for the rest of the day. So in the UK, folks, we have a down-up situation. And for those of you that are new, these two words, folks, are probably the most important on VectorVest. Down, up. Down refers to the primary wave or the short-term trend, and up, the second word, refers to the underlying trend or the longer term measure of the trend. And this call, the confirm call, simply means that the underlying trend is up and it's been confirmed by 2 weeks price action. The traffic light says that the momentum and the strength of the primary wave is not great, and VectorVest does not advocate buying stocks at this time. So that summarizes the trend situation. So we have an uptrend that's under a bit of pressure. So if we now look at the VectorVest composite, which I think I've got open, which is this fellow in the UK. Yep. This is the composite over the last year. So this is an equally weighted index of all of the shares that we follow on the London market, both the main market and on AIM. It's an equally weighted index, and we believe that reflects the sentiment of the market much better than a market cap weighted index. As you can see, this long measure of the market, wide measure should I say, of the market, has made a new high, read the pre-COVID high, and as you probably well are aware, the FTSE 100 certainly hasn't. As you can see, there were the highs February last year before COVID hit us, and the market broke that in January and came back and charted a double bottom there. Those of you that know my work will know that I always feel that a double bottom after a decent run is a very positive event, and I was quite that has moved up, and now these lows are in place. So yesterday we got this big day down. Let's just look at the trend situation again. For those of you that are new, we have this little drop down box, and these are all the market timing measures on VectorVest, and from the longest, confirm calls, to the shortest, the primary wave, and one in between that I find very useful is the DEW, a medium term market timing system, very useful for swing trades. So we start with the longest one. There's the longest measure of the trend, and as you can see, since the 11th of November this has been up, and that's the guts of 6 months now. So the primary wave filters out a great deal of the short-term noise. What we can see down below, this is our buy-sell ratio, the number of shares that are on a buy divided by the number of shares that are on a sell. And at the minute, folks, we have a long divergence here where this price is rising and the buy-sell ratio is falling. And that's never great. And although I personally don't adhere to a strict sell in May and go away, in other words, I don't sell just because it's May, I think that you'll find that if we were to get one of these confirmed calls, which is preceded by this level of divergence on the buy-sell ratio, which Dr. DeLeo also calls the canary, that needs to be taken very, very seriously indeed. Okay, we've had a really good run here. There's no doubt that certainly in the US inflation is raging. If you look at any form of commodity. It's making 10-year highs. Copper just went above 10-year highs at the last couple of days. Soybeans is up there, corn is up there. If they do put inflation up, and you can see what a mere mention of it yesterday caused, then we can certainly pull back a little bit. Let's just be very careful here. At the moment, the advice on VectorVest says don't buy any stocks, and we have to take that quite seriously. All right, and let's see how it plays out. By Saturday morning, when you get this, the situation could have completely changed. Let's hope it has. The MTI, which is a measure of the momentum of the market, also making falling tops here, but it's this very marked divergence on the buy-sell ratio that I think it's worthy of looking at. We look at the DEW. Let's go to a 6-month chart now. We look at the DEW. The DEW has been up. See a shorter measure of the trend. DEW has been up here since the start of March, and that is still up. Okay, we have an uptrend, and we put on the short-term measure of the market. This moves back a lot, and it's currently on a down signal. So the uptrend under pressure, and the divergence between the price and the buy-sell ratio, certainly a worry. All right, my portfolio, I'll discuss that in a great deal of detail next Monday afternoon. I'm reasonably well pleased with it. That wasn't always the case, as you know. I sat through a great deal of chop before the market started to move again, but the shares that, mostly high RS shares that I put my faith in, have in fact proved their worth. So now if we look at the American market, there's the American market, and that's the after effects of that huge day down yesterday, that gap down. A little bit better at the close, and as you can see, the declines twice that of the advances, and emphatically VectorVest does not advocate buying stocks at this time. Red lights, and the short-term trend has been down now for 3 days. The underlying trend is still up, and we've got a confirmed up in place. And again, if I have loaded the VectorVest composite for the US market, and we can see that this last move up, folks, has occurred on no breadth at all, and that's a real worry. Okay, so this thing has trotted its way up here, and it's been going up on a few advances, mostly building stocks in the US, and building stocks have had an outstanding run, and that's my best position in the American market at the minute. It's Hortons, which is paid for, getting stopped out on a few tech positions, namely apps, and that's just the way it is. So we're in a market in the US, folks, that's very choppy indeed, and certainly the moves haven't worked out that well. Those people that favored getting in and making some money after 3 or 4 days and getting out have prospered. So if we put on the trends on this, the longer term trend, the confirmed up, is there. As you can see, it got bounced around in this period. Go to a 6-month chart. The DEW, the medium term measure of the market, is still up. And as I mentioned a second ago, the primary wave over that 3-month chart has been down for the last 3 days. So the uptrend under pressure, and the longer term measures of the momentum and the breadth all divergent with price. So it's certainly a time to be very careful indeed. We haven't had a decent pullback in a heck of a long time. So if you look at the last year, after this huge move up, we could certainly come down even under the most positive circumstances, and in fact kiss the February highs. That would be a pullback to here would be certainly totally in sync with the bull market being intact. So that is in fact all I have to say. Just be very careful going into May. I'm holding my positions. I'm not looking at seasonality just looking carefully and very wary of the VectorVest market timing signals, especially as they're being preceded in both countries by divergence between the price of a composite and the buy-sell ratio. So I look forward to seeing you on Stan Heller's international group on Saturday afternoon, 4 o'clock UK time, and then I'll be back at our usual slot on Monday afternoon at 1:30. We have had some problems with emails, so folks, if you don't get an invite to Monday afternoon, just give me an email, david.paul@vectorvest.com. Thanks very much.